Hello, good afternoon. You're watching Closing Trade on etnow. I'm Anisha Jain, and the closing trades are bleeding red at the moment. At least from the bottom of the day, we have seen a bit of recovery, but nonetheless, the color is firmly red today. And that's been the overall status throughout the trading session as well. It's global weakness which is weighing heavy on the market. Of course, the surge that we have seen in the 10-year US yields as well as 30-year is not helping the case because there was a big drawdown that happened in the US markets as well. For now, at least the Dow futures have recovered. At one point of time, they were showing a cut of 150 points. They have now pretty much balanced out, so there's some recovery. And that's what has worked out in the Indian markets as well, but still below 19,400. It's the broader markets which have also completely reeled under pressure, so very broad sell-off. Earlier in the month we had seen, or rather earlier in last many weeks we had seen that the broader markets were outperforming. Not today, they have given up the gains today. It's red across all sectors, so there's no sector which has been spared. It's only FMCG which kept on flip-flopping between the red and the green, and the biggest loser on the street is actually the PSU banking space because a lot of names like PNB etc. are coming under a lot of pressure. Real estate stocks like Sobha Industries are also in focus on account of the sell-off that we are seeing. But difficult to call out anything particularly today, Aisha, because it's just red, which just seems to be on mine. It's not bleed blue right now, even if the World Cup is starting today, but it's red, the color that we are wearing.
It is, and you know, that's exactly the color on the screen as well. I wonder what's going on with Axis Bank though. That's really sharply lower. If we can just bring up the intraday graph, because much unlike yesterday's case in point with HDFC Bank, today the sole culprit of the weakness is Axis, which is now down 4.5%. I mean, not to say that HDFC Bank did not have a rough start, that too did, but then it did see a marked recovery as well. Axis is now sub the 1,000 rupee per share mark, and that's really weighing heavy on the way the bank Nifty as well is panning out, which by the way is underperforming even the Nifty. ICICI Bank in tow with it for a second consecutive day this week. That's also down about almost 1.25% as we speak on the futures. So that's pretty much the trading sentiment right now. I want to bring up Bajaj Finance even after the strong quarterly update that they came out with, and post that the brokerage upgrades that came in, that stock as well is seeing some weakness trickle in. Talk about individual movers, and let's just bring up those stocks as well one by one. Like I said, Bajaj Finance AUM growth is above the guidance that they set out, and that's something that impressed the street, not really rubbing off on the stock, at least today. Yesterday, of course, that stock was a decent mover in an otherwise weak market. HDFC Bank as well, the second quarter updates have come, although they already hinted at, you know, a weak financial closing for them. But you are seeing some covering coming in on HDFC Bank. Avenue Supermarts, that's the other one which is in focus right now. Brokerages have liked what the second quarter updates are, and Morgan Stanley is hinting at some sort of growth visibility for them. Today it's seeing a meaningful comeback, almost a 4% uptick on Avenue as we speak. And then Bangalore court has initiated criminal proceedings. That is what reports seem to be indicating against Sobha promoters. There are accusations, remember, of forgery in one of the projects worth about 1,000 crore rupees, and which is why you're seeing that big sharp cut come in on Sobha Limited. Now also down about almost 5.5%. But let's welcome on board a chartist and find out what this breach, Kunal, of 19,400, and for a second consecutive, moment in the day, if I can call it that, because for a brief while we did recover as well from that level, but it continues to stay put as is.
It continues to be a weak market, weak indices, and till the last couple of days we were actually seeing a divergence that the index was going through selling, large cap stocks were witnessing selling, but the mid caps and the small caps used to outperform. But we've not seen that happening today, which means more or less all the sectors and majority of the bent of the market is towards selling as well as maybe profit booking or trying to cut back the leverage in many positions. The only solace for the markets today is the recovery which you're seeing into these key private sector banking names. So maybe that this could be a possible start of a shift from the PSU banking names to the private sector banking stocks. Of course, we'll have to look out for follow-through price action. On the index specific, 19,300, which was the previous low, I think the index had hit in the month of August. So we've managed to almost retest the previous major supports for the index. I believe now we should at least get into the zone of stability. May not see a strong growth on the downside, but at least a couple of days of pause, if not a mild bounce.
Right. Naresh, hi, afternoon. Two stocks for you. A, the HDFC Bank recovery, and does it seem like this is going to see some follow through? And B, the big dip that you're seeing in Axis as well as ICICI Bank.
So we've been seeing this divergent moves in a lot of banking names. So Axis Bank was the one which was holding on for the last many weeks, and HDFC Bank was the one which was drifting lower. Today we are seeing a shift, and that happened post the monthly updates from HDFC Bank. But the structure is still weak, wherein this bounce back could take it max towards that 1580 to 1600 mark, which is where it gapped down. Till the time we don't go above 1600 to 1630, which is the gap down which we saw recently with a very large volume tick, the trend will remain sideways. So for now, we could continue to see some bounce back. First indications of a reversal would be closing above 30, 35 levels. Axis Bank, on the other hand, looks like an interesting opportunity here at 990, 94 levels. The last low for the stock is 970, and the previous all-time highs, which where it was consolidating, was around 990, 995 levels. So it's a classical retest of the breakout. So out there it becomes a 10, 20 rupees stop loss, and eventually one would expect it to again go back and make new all-time highs. So it's a risk-reward trade, a breakout retest here. So Axis still looks interesting. HDFC Bank could see some bit of a bounce back, but not very convincing.
Okay, point taken. So those were some of the recommendations coming in from the banking arena. But let's talk about the sector and the segment which is managing to buck the trend and is holding up in the green. That's the FMCG space. Nestle is higher by 3% on account of that stock split which is expected. HUL is doing okay. Britannia is also holding up. So a lot of these names from this vertical which are doing all right. What would you do, Kunal, with the FMCG names? Anything that catches your fancy as a fresh buy?
Well, I think HUL is the one which actually looks to at least get into that zone of slight outperformance. Even though I think this is the first day where the stock has shown a swing breakout. By that I mean I think around 7 or 8 days of previous highs have been taken out after today's price action for HUL. But the concern is that the stock has shown this pattern even earlier in the last 2 or 3 months, but then it failed to have an immediate follow-through price action. So I think that's the bigger concern for FMCG names. Now, if there is a decisive trend that the defensives or the market is tilting back towards the defensives or the low beta pocket, then these stocks should have an immediate follow-through, maybe from tomorrow onwards. So if we see a follow-through price action for the likes of HUL, Britannia, etc., then we can decisively say that possibly the markets are tilting towards defensives, and these stocks as well as the entire sector could go into a decent rally mode. So I'll wait out for maybe another day or so of confirmation, only then take a trade on many of these FMCG stocks.
Okay, that's the take coming in on which way FMCG is headed. For right now, like we've been marking, the weakness is of course pronounced in names like Axis and ICICI Bank. I can say the same about Bajaj Finserv and Bajaj Finance as well, which is down about 1.6%. But then again, there are others like an Avenue Supermart, not of course an apple-to-apple comparison, but that stock of course is holding out well. Kunal, you were making the observation earlier in the morning, right, that you do see a material upside on Avenue Supermarts from the current levels.
Well, yes, Aisha. In fact, many of the indicators have started to get into a breakout zone for the stock. And when indicators lead the breakout, prices, they tend to have a very stronger alignment or realignment with the indicators. So I think that's what actually is happening in terms of the technical structure for DMart. The stock in the last 2 weeks, I think there was an attempt towards 3,800, 850 mark for Avenue Supermarts a couple of weeks back, then a retest of 200-day moving average. It managed to protect almost exactly or bounce exactly from those levels of 200 DMA, and then now a retest of 3850 mark as well as a crossover above those levels. So that's again a confirmation that the minor retracement is over and the stock has confirmed a swing breakout. So even that augurs very well for Avenue Supermart. So I believe now the stock should get into a trending mode. My initial targets for Avenue Supermarts would probably be in the range of 4,000 to 4,100. But I would also strongly believe that the stock should scale past about the 5,400 mark, possibly in the next 6 months or so.
Okay, actually, we did speak with Abneesh as well today, Abneesh Roy of Nuvama Institutional Equities, and he was quite positive about Avenue Supermarts, saying that the improvement is visible and going forward, it's likely to pick up pace. We'll try and cut out that bite as well. But in the meantime, listen into what Vijay Kedia had to say about how he's looking at the mid cap and the small cap index, given the fact that right now we have seen that both those small cap and mid cap spaces become very frothy and expensive. Is he taking some bets off table, booking profits, or continuing with his conviction? Listen in.
We had a chat on the same forum, a different year, and you said Sensex 1 lakh hoga. Today 60,000. तो निफ्टी 25,000 कब होगा?
25,000
25,000 तो हो जाएगा.
अभी तो क्या अभी कितना
50,000.
60,000 जो अभी सेंसेक्स है अल्टीमेटली
That's a better way of looking at it. हाँ. तो वो when do you think it will happen?
या निफ्टी सेंसेक्स को फॉलो करता है.
Okay.
तो वो अल्टीमेटली होने वाला है. तो सेंसेक्स अगर 1 लाख की अगर बात करते हो तो मेरे को लगता है सेंसेक्स 1 लाख क्या 4-5 साल में हो जाना चाहिए.
4-5 years.
हाँ हाँ हाँ.
13-14% earnings growth, little bit of P expansion. Rule of 70 to actually less than 5 years.
हाँ तो बस इसमें हो जाना चाहिए.
But so Nifty is at 20,000. Will you be surprised that in next 10 years we could be closer to 1 lakh on the Nifty?
In 10 years 20,000 1 लाख. ये तो थोड़ा ज्यादा लगता है मालूम.
ज्यादा लगता है. 50,000 हो सकता है.
50,000 तो हो सकता है. 10 साल में आप बोल रहे 50,000 2.5 गुना ही हुआ ना. वो तो हो सकता है. That's a possibility.
Take coming in from Vijay Kedia, but of course it's a banking space that's putting a lot of pressure at the index. So let's discuss the BFSI space more with Pranav Gundlapalli. He's a senior research analyst at Bernstein, joining us on the show. Hi Pranav, good to have you on the show. Thanks so much for making time. Let's start by discussing HDFC Bank. The merged entity came out with its Q2 provisional update. What's the read-through?
Hey, so I think the HDFC headline numbers were positive, especially after the expectations were set low from the analyst meet, which the bank had about a couple of weeks ago. So I think the key positives are, one, the deposit growth. They had a good 18% plus year-on-year growth in deposits, which translates to almost about 1.1 trillion of additional deposits added during the quarter. I think that's the biggest positive, and that was where all the concerns were. If they can continue gathering deposits at a good pace, and that's partly led to rest from this update. Second, in terms of loan growth, also again, healthy numbers of about 18% when you consider the HDFC Bank book and HDFC Limited's retail book alone, right? So I think there is still some of the HDFC non-retail book which is being run down. So that will keep the headline loan growth number lower than what the bank has usually been reporting. But overall, if you take the core portfolios, loan growth, and the deposit growth, I think on both these fronts, it was a fairly good set of numbers. And that, again, ties in with what you've seen across the sector, where the loan growth has come out to be quite good for all the banks that have reported their headline numbers so far.
Right. Pranav, I'm wondering, looking at Axis, I mean, what's gone wrong here? Is it just aligning itself with the weakness that we've seen pronounced in ICICI Bank and HDFC Bank?
It's more of that, right? I think you've seen that weakness for the banks, at least in the recent weeks. I think that is more to do with some of the global factors that are driving it down, rather than any bank-specific news at this stage. So HDFC just stood out because of the positive print that came out. But otherwise, you've seen that banks have generally lagged the overall index by a big margin in the last few weeks.
Word on the Axis Bank, because the bank has just, informed the exchanges that the news regarding 10,000 crore QIP is speculative in nature. So they are rebutting the article that was there in the morning in one of the papers, because they are saying that for now it's purely speculative and factually incorrect, and that's why perhaps we are likely to see a bit of a recovery when it comes to Axis Bank as well. But Pranav, apart from the large private banking names, PSU banks had seen quite a bit of favor from even institutional investors from the start of the year. Seems to be reversing a bit, at least today. What's your take when it comes to the PSU banking space? Do you think there is more room for improvement and then the upside on the stock prices?
So I think the overall, as a PSU unit as a whole, I think they have benefited from a re-rating as they continue to deliver healthy loan growth numbers down to the June quarter. I think what is now starting to show up is the pressure on margins. So it's now become a choice of, growth versus margins. And I think SBI's NIM surprise last quarter was probably one of the best examples of that pressures that now have become very real for the PSU Bank. So now it's going to become a harder challenge for the PSU banks to continue delivering that 20%, 30% EPS growth, as they will have to balance off between growth and margin. So in that sense, the earnings growth for those banks will start to look weaker versus the private sector banks, and then therefore the valuation multiple upside becomes limited. For SBI in particular, I think they have been pulled down because of capital issues, not the same kind that Axis has had, but more of a lack of organic capital accretion. I think that's something that's holding SBI back, and also the fact that they have not announced any big capital raise, even though their capital levels are specific to SBI, but for the broader PSU set, I think the days of supernormal earnings growth is largely done, and now they'll have to trade off between loan growth and margins.
That's a take coming in on the public banking space. But Pranav, what about the NBFCs at large? For instance, Bajaj Finance came out with a stellar set of numbers when it comes to their reporting. People are upping their guidance in terms of AUM growth for 33-35% thereabouts, but the stock is still not reacting. Is it the entire market mood which is such, or where do you see Bajaj Finance and the other NBFCs headed?
So I think for NBFCs, two things here. I think on the positive front, I think the loan growth is holding up for the sector quite well. I think this is true for banks to a large extent, and more so for NBFCs, which are more consumer focused. I think versus start of the year, I think there is a lot more conviction that the consumer growth is good and is going to continue for longer. So that's the positive front. On the negative, I think the expectations of rate cut, which had a part in the NBFCs going up in the earlier part of the year, is now tapered off, right? So I think the expectations of rate cut are now pushed out to maybe mid next year or maybe even later. So that is something which is a negative for NBFCs, because a rate cut would have done their margins good. So that being pushed out is a negative, which is partly offset by loan growth continuing to come out quite healthily. So I think that's the balance that's coming off for NBFCs. And that's what you're seeing getting reflected in the stocks as well.
Pranav, what's the bias like? Do we buy the decline in private banks or the uptick in PSBs? Any recommendations from your end?
We prefer the private sector banks here. I think that so most of the factors that could that explain the run up in the PSUs and some of the other banks have largely played out. The valuation multiple re-rating, the earnings rebound because of normalization of credit costs, all those factors are largely done. So from here on, it will go back to the basics. And therefore, we prefer the private sector banks at this stage, just because of their sheer better deposit gathering ability. I think that's what really is going to stand out as a differentiator. And we prefer the private sector banks. And within that, the HDFC, we think, has a significant room for re-rating once the merger-related uncertainties are laid to rest, and therefore remains our topic in the space.
Okay, Pranav, thanks so much for joining us with that take on the entire banking space. So that's the verdict coming in. At least for now, Bernstein prefers the private banking names, especially the large caps at that. In terms of the other big movers, it's Edelweiss Financial, which has suddenly spiked 7%. Adani names like Adani Wilmar Enterprises have been doing well. And now Avenue Supermarts, as we flagged out, is high by 4%. JSW Infrastructure continues the up move today as well. That stock too is high by around 4%. On the losing side, it's Indiabulls Housing, which has seen a cut of around 7%. Metro Brands is down, JSW Energy and Sobha as well. Actually, Nuresh, come in on the stocks of JSW Energy as well as Sobha because they were doing all right. At least JSW Energy was seeing quite a bit of an uptrend. Is today one of those off days or has something reversed?
So the stock has been volatile in the near term. After breaking about the 390 mark, it has gone to 430, back to 390 a few times. A few days back also, the stock was at 440, went back to 420 levels. So overall volatility is still there. Till the time it does not break 390, the trend remains positive. 390 was the high for the stock back in 2021-22. So it's a multi-year breakout as well out here. The trend is still positive. So for now, it's a buy on dips. Soba, on the other hand, has kept on seeing this gap down moves many times. But technically, the structure is still making a bottoming out formation. 600 to 750 is a range. So till the time we are in this range, it could continue to be sideways. Once it crosses 730, 750, that is where the trend will change for the stock.
Note, let's slip into a quick break. We are seeing a mild bit of recovery in a few of the large caps, Axis Bank too actually, and the technology names are the ones which are springing a decent comeback. Almost 1% to 1.5% from the day's lows is the kind of recovery that you're seeing on most large caps. But we'll analyze all of that after this very short break. Back with closing trades right here on ET now. The closing trades still very much under pressure. I mean, yes, we've recovered from the session lows and once again we are back at defending that 19,400 point. But for the large part of today's trading session, we've actually struggled under that mark for the Nifty. We're up a good 90 points from the day's low, but let's see. We've still got more than half an hour left to go, whether we sustain this or not. Axis Bank, ICICI Bank still under pressure. So is the Nifty Bank, which is way underperforming what the benchmark Nifty is doing. But sectorally, if you just had to pick up one sector, that's metals and financials, which are the ones which are most under pressure. In fact, pick up any metal counter today, be it JSW Steel, Jindal Steel, Hindalco, Vedanta, Hindustan Copper, Tata Steel, Nalco, SAIL, all of them are deep down in the red as we speak. So this is one, big sector loser, so to speak. Of course, there's added pressure from Bajaj Finance, Bajaj Finserv, Bajaj Auto. A lot of these stocks are under pressure as we speak right now. Varun Lochap too from HDFC Securities joins in on the show right now. Varun, hi, afternoon. Good to have you on the show. Varun, we are 3.5% odd from the recent peak of the market or the all-time peak for the Nifty per se. Just wanted to understand, do you foresee further weakness, or would you say at the current levels after the recent correction that's played out, the valuations at an index level look comfortable?
Yeah, hi, good afternoon. So overall index, our view has been over last couple of months that, we are hitting sort of a ceiling in terms of, where possibly the upsides could be, that looks quite muted over the next 6 to 9 months, given the fact that while optically, you might say that Nifty is still only 10-15% above long-term averages, but you have to keep in mind the fact that now earnings are completely normalized across sectors. So in that sense, you are, sitting at sort of peak earnings, and on that market is, of 20 times FY24. Even after this correction, it's around 20.5 times basis our estimates. So while we are off 3-4% from the highs, I won't rule out possibility of another 4-5% kind of a fall, which is possible, but I would not say that it's going to happen for sure. But one has to be prepared for that kind of a volatility, given how global markets are, given how US bond yields are rising, and given the fact that we are not particularly cheap even after this fall. So stay slightly cautious, stay selective, and don't be overexposed in businesses or stocks which are overvalued or which you don't understand as well.
Sure, Varun, but given the fact you're not ruling out the possibility of a 4 to 5% cut in the global volatility, then would you suggest that it's time now to look back into those defensive sectors, pharma, even FMCG for that matter?
I would, it depends. Like between the two sectors that you mentioned, pharma we are positive on, but not so much from a defensive perspective. We believe earnings are going to pick up out there, compared to where we were 6 months back. The pressure on, in US generic seems to be receding at the margin. At the same time, domestic growth is good. Margins are also looking decent. Valuations are reasonable. So pharma, we are positive on. FMCG, we are sort of still underweight in our model portfolio. We have been underweight for last 3 years. While we believe the worst in from a volume or a demand perspective is behind, you may not see big upside still, given the fact that valuations are still a bit on the higher side. But yeah, tactically near term, if market falls, then even FMCG could outperform, given it's a classic defensive, plus it has not done much in the 6-9 months. So stocks which have run up the hardest in the last 6 to 9 months will probably feel the maximum sort of a near-term volatility compared to other sectors.
Right. Okay, that's the take coming in on some of the pharma as well as the FMCG names. But Varun, what's leading to this incessant weakness within the metals pack today?
I think, metals, if you see, are closely linked to how China does. And if you look at Chinese markets, they have been quite weak over last, I would say 3 to 4 months. If you look at the Chinese indices, they are down. So the hope of, China recovery and some stimulus coming, which will, lift up the GDP. I think the confidence of global markets and investors on that hypothesis seems to be waning, and therefore you are seeing pressure on metal names. And if you would recall, these metal names did have a bounce and they did move up. In fact, some of them are up on a 6-12 month basis quite significantly. So it's not that it's a completely beaten down sector. So I think there is a possibility of further downside in case one doesn't get visibility on China's recovery.
Before we let you go, Varun, what are the top ideas right now that HDFC Securities is recommending?
So it's across a whole host of sectors. So we have got, in terms of sectors, the ones that we prefer are, as I said, pharma is one of them. We are still positive on power. We are positive on real estate. So names like, DLF and Shobha on the real estate side. In capital goods, we like L&T, NCC on the construction side. So it's a blend. In financials, we like Axis and ICICI Bank. So we have picks across sectors. We don't see any big mispricing or mispriced opportunities in any of the sectors. Nothing is too sort of, I would say, on the value side. And in fact, in certain sectors, we are struggling to find compelling ideas now, given the way stocks have run up in last 6 to 9 months. So if some volatility comes in and you get better prices, all the more better for investors.
Okay, Varun, on that note, we'll let you go. Thank you so much for making time and speaking with ET Now. Let's get the top recommendations from our chartists as well. And what are the closing trades, Kunal?
So I'll recommend to book profit on the short positions on the Nifty, which we initiated yesterday. My sense is that this 19,300 mark could possibly act as a support for the index. So it's more of a book profit on the short positions on Nifty.
Okay, so it's not a sell on Nifty. It's only the short positions that you need to cover is what Kunal is saying, because he's getting a bounce from 19,300 levels. What about you, Naresh?
So that would be a buy on Axis Bank. The stock has corrected a good 4% today. 990, 995 was the last breakout point, a retest here and reversing from those levels. So a risk reward at current levels looks interesting, could bounce back and go towards 1,050 again.
Okay, on that note, let's slip into a break while there is weakness, of course, in the markets. But look at the recovery in Eicher Motors, HDFC Bank, which we've been talking about in any case, and Adani Enterprises, which is sitting at a near 4% gain as we speak right now. So a handful of winners definitely out there. We'll take a very quick break. When we come back, continue tracking markets.
Welcome back. A bit of a recovery in the market. Of course, Axis Bank is the one which is leading that from the front, but a couple of IT names like HCL Tech, etc. are also bouncing back from the lows of the sessions, and that's something which is supporting the sentiment. HDFC Bank has been doing quite well since the start of the trading session. That too is adding on to gains, so 1.5% on that one as well. Rahul Sharma joins us to talk to us about the technicals of the market as well, given there's a lot of volatility. Rahul, you had got it right at the start September month when you talked about a 1,000-point rally. What do you envisage for the month of October now? Has started on a very, very wobbly note.
Yeah, very good afternoon. So definitely some pain in there for the markets since we've broken the 19,500 support area. So far, we have been holding strong given the relative outperformance in the mid and small caps. But what now needs to be
have snapped that line. Just going to get back to Rahul in just a second. Devang, hi, afternoon. What is it that you're making of the weakness that one is seeing in the large private banking names? I mean, everything from an HDFC Bank, minus, of course, today's recovery, to Axis and ICICI Bank. Are these dips to be bought?
Thanks for having me on the show, Aisha. I think certainly, yes, this is an opportunity which I think a lot of people have been sort of waiting for. We saw a good rally in the PSU banks. Earlier, private banks also led the entire stable, as well as certain NBFCs also came to the fore. I think this correction and consolidation that we are seeing actually augurs very well for the health of the markets. As such, it can't be a one-way ride, and there has to be certain gravity to the proceedings. And that's what I think the US bond yields, the longer for higher interest rates, inflation, all this right now are sort of acting as a deterrence for the up move in the market. And I think this correction, which is right now going on in our markets, probably gives a lot of people who sort of had missed out the bus an opportunity. And more so, the question on the private banks, I think it's been more or less a market of sector rotation. There has been so much of sector rotation. You see suddenly FMCG stocks come to the fore, discretionary consumption stocks doing well. Someday pharmaceuticals also probably coming back. So most of this, I don't read much into it. As such, the market breadth has not been extremely negative. That's one heart that I can take out from this phase of the market.
That's some silver lining that you're watching out for, Devang. But let's just get back to the conversation we were having with Rahul. Rahul, you're making your point about the markets and the private banking names.
Yeah, absolutely. So below 19,500, definitely the discomfort amongst traders have gone up. But we're looking at it more from a opportunity perspective, and specifically those sectors and stocks which have shown relative resilience or outperformance in this fall. So out of these, the PSU banking pack is one where we've seen continued traction happening in terms of fresh addition after the big rally that we saw last month. And second is IT, which looks like a good buy on dip candidate. So if you remember from June, we were very spot on in terms of identifying the breakout in the IT index. Now I think the recent correction brings in another round of opportunity for fresh re-entry into the same, and we feel especially the large cap IT names can be looked upon going on the long side from here. And once the rally kicks in, the mid-cap IT is also expected to follow. So Infosys is something that we like, particularly in this space. One can look to buy for a trading bounce back of 1,500, 1,525. And otherwise also we feel that, even if you have it in your portfolio, I think this is the right time to add on to the IT exposure, which is relatively, performed better in the last 3 months. And this seems like a good buy on dip opportunity.
Right. Aside of the buy list, what is it that you would recommend shorting at this current level, given the weakness, Rahul, that we're seeing in the market?
Yeah, so, primarily pain has been in the private banking space, but I would say, this at this point in time at 19,400, the risk reward isn't exactly favorable for fresh shorts. If there is a bounce back, say somewhere around the 19,700 mark, then it would call for a sell on rise of a kind of a view where one can look to short with a minimal stop loss of 9,800 and then look for another round of down move. At this point in time, especially given today's candle that we formed after forming a new low, at least during the day, some bit of recovery and seems like a bit of short covering has happened today. This calls, at least for a pause in terms of the bearish view as far as the broader market is concerned. So we are not out of the woods yet, but the best thing to do is unless and until 19,800 is not taken out, this remains a sell on rise kind of a market when 19,200 is something that we are expecting on the downside.
Rahul, good to have you on the show. We'll let you go on that note. Devang, stay with us as we take a break. The World Cup fever clearly has gripped India, and my colleague Simita Karir caught up with Prasad Anand, who's the director, SG Private Limited. The company manufactures the all-famous Willow bats. Many of them also now have smart sensors, it seems. Let's hear out how they're gearing up for this World Cup.
Seen that in the cricketing industry, there's been a growth in participation, and there are several factors for that. One could be, just the fact people are realizing that, to stay healthy is very important. And, sport is probably a medium by which, you can stay healthy and then follow your passion as well. So we've seen that. We witnessed the growth in the demand for cricket in the last 3-4 years, domestically as well as export. And definitely there has been a pressure, for the industry to cope up with the demand. And now with the World Cup, and if you have a good World Cup as far as India's performance is concerned, I think there'll be more concerns of the demand going up.
Right. Do you want to share some numbers? Because Kashmiri manufacturers say that the demand has doubled, and some of them say they will not be able to meet that demand because the supply, there are constraints as far as supply is concerned. Do you want to share some numbers?
See, historically, what had happened was, say, for example, if there were 2.5 million clefts being prepared in Kashmir, the demand would have been a little less than that. But now what we are witnessing is, if the capacity is about 2.5 to, say, 3 million, the demand has gone up, considerably.
You're making hybrid bats, Kashmir willow, English willow, to ensure affordability.
Yeah.
But there is also a factor, the technology factor, that's also ensuring affordability of products. In fact, what we are hearing is that now the bats have technologies,
yes,
have sensors that actually tell you how many times
yes,
the ball is hit the bat.
So this is an innovative product we've come out, and we're calling it the Smart Willow. And again, it's made out of English willow, Kashmir willow, and also the hybrid, where when you use that bat, it's a SG bat with the sensor. When you use that bat with the sensor, it tells you your bat speed, it tells you the angle that your bat is coming, it tells you the impact speed, how many times you hit the sweet spot, and it's a brilliant tool. Like talk about value addition, it's a brilliant tool for a kid who otherwise would have, no access of data, that, if he's playing at a level this year, for him to compare, by training, by getting coaching, for him to compare 6 months down the line or a year down the line.
Okay, since we are talking about World Cup, Devang, a lot of sectors which are likely to benefit, the QSR names, Zomato, etc., they are likely to see increased ordering as well. Your take of which could be the beneficiaries?
Yeah, I think it is very clear. We are seeing that the discretionary side of the consumption has also gone up. This is quite evident from the auto car numbers, the passenger car numbers particularly, which we saw for September. Yes, I think probably what is going to happen over the next 40-45 days during the period of is that there are a lot of companies which will benefit. Of course, you talked about certain QSR, you talked about gaming companies, but I think again there's also a problem which is emanated for the gaming companies as well. QSRs would surely benefit. Travel and tourism, hotel stocks are surely going to see, but this more or less this has been factored in. Airlines, I'm told the prices are anywhere in excess of around 80-90%, and hotels have been booked 100 to 150% up as well. So most of the venues, in fact, something like Dharamshala is completely sold out. It's already a tourism hub, but travel and tourism will get a big boost during these days. Even the festive season falls in November, December. So I think October, November, December is when you see Dussehra, when you see Diwali, when you see the wedding season coming, as well as this time again to sort of be a cherry on the cake. It's also the World Cup. So I think a lot of this host allied sectors would benefit. But as I said, more or less the market has factored in this numbers. It would be very interesting to see these numbers in January. The November, December, the numbers which come in January, if yes, people would have estimated it a little lower, I think there would be a large rally which probably could be even seen in that quarter.
Since we're talking about World Cup and the QSR space as well, we spoke with Abneesh Roy to understand what's happening with respect to the pizza prices, because of course at the start of the day we all saw those headlines in the newspapers talking about a 50% cut in some of the prices and some big offers being doled out by these QSR companies as well. Listen in to what he has to say about the volume uptick that we should expect.
Promotions and price offs in consumption is very common. You have a big opportunity of Cricket World Cup being there. Yes, there is a competition which has come. We have highlighted in our Coffee with CEO note on Sapphire Foods also that in Gujarat, for example, a lot of the local restaurants are also offering pizza. So competitive intensity has gone up. As I said, La Pino's and even Pizza Hut and a lot of the clouds are doing well. So I will say it's a mix of new opportunity from World Cup. And you need to keep engaging customer with promotion so that he sticks to the brand. But more importantly, you have to engage with the whole family audience. So these large pizzas are consumed by the families. So this is a new segment they are targeting in a more aggressive manner and to engage with the youth also. So I would say it's a mix of all this. I don't think this really impacts margins in any significant manner because this is more of targeted promotions and in one segment of the pizza. They have not cut prices across the board. If they cut prices by 30-40% across the board, then the whole profitability matrix goes for a toss. No company does like that. So I would say that yes, it's a good step and it will not have a very big impact on profitability.
Okay, just taking stock of what else has been holding out in the market, and while you are definitely seeing a fair amount of covering coming in for the IT names, the question is whether it's going to sustain or not. Naresh, what's your sense? The charts of TCS, HCL Technologies, does the recovery seem sustainable?
So TCS looks promising. It has retested the short-term breakout levels. The next is it should make a bounce back towards that 3600, 3620 mark. If it can cross that, that would be a fresh breakout move. So for now, a bounce back, but structurally, it looks pretty positive. Same is the case with HCL Tech, which has seen a little bit of a dip. 1200, 1240 remains a support. Out here also, it can slowly and steadily go up. So like TCS and HCL Tech, Infosys would find it tougher to cross that 1500 mark. But overall, IT could see some bounce back across the board.
In fact, discussing IT only, Devang, what's your take as to how one should position ahead of the earnings season, which will kickstart next week?
Needs to be actually positive for this space. The only worry that I have is after every result season, probably on the result day, there has been a huge volatility, though we don't look out for that 5-7% type of corrections because in the term 3 years, I think it just negates itself. But the important part is that rather than the numbers, is actually the body language and the commentary of the management, a bit of guidance in how they are looking at the global scheme of things. When we talk about the US yields and we talk about sort of recessionary type of things, as well as generally you get feeds that everything is going fine. We generally want to listen to the how the European as well as the American economy, where the mainstay of their sort of revenues come in, how they are panning out and how are the other businesses in the BFSI space over there phasing out. So if one gets a little bit of clarity on that, and again, if the stock rises by 5-7%, but people should probably wait in for that results and then get into the bandwagon. I feel the valuation correction has happened. There's also been certain price correction and there have also been bounce backs. But yes, overall, I think once the result season is over, probably one can take stock on a comparative basis with the TCS, with the Infosys, HCL Tech, which are trading at what valuation and how the guidance has gone forward. That's important to monitor, according to me.
Sure, that's the take coming in on IT. In the meantime, let's take it across to Sharad, find out what the dealing room chatter is like. Sharad?
Well, yes, in focus we are having endurance tech, and what we are gathering from the dealers is this buying coming in from the HNI as well as certain DI counters. Interestingly, if you look at the volumes, that has also picked up almost 8 times its 20-day average. And the key DIs already invested in the company include the names such as UTI Mutual Fund, Axis Mutual Fund, as well as SBI Mutual Fund. Now, importantly, 2 important factors are there which might be a re-rating in the short term, and that is, of course, the increasing demand coming from the European segment, and we did see some really good set of numbers coming in when it comes to Class 8 orders as well from the European markets as well. Apart from this, also the supply chain issues, that has something improved very considerably, and it's expected that more demand would be coming in, especially from the European segment. And the company has been also focusing on the EV segment, where roughly 42% of total revenues are coming. So endurance tech would be in focus.
Point taken, Sharad. So we'll watch out for endurance tech and the buying that's happening on that counter. Where else is the buying happening? Very, very varied, to be honest. There's something like a Tata Investment and Adani Wilmar, Ramco Cement, Avenue, Nestle India actually perking up, Escort. So very, very broad-based and names actually seeing a bit of a reaction on the upside. On the downside, however, it's Metro Brands, Manappuram Finance, Macrotech Developers, Axis Bank as well, and Sobha as well. In fact, Naresh, your take on the real estate names. This slide that we are seeing in Macrotech Developers for the last couple of days and today on Sobha, would you call this profit booking or what's happening in these stocks?
So would be a little bit of profit booking. Macrotech Developers has gone up from 350, 400 levels all the way to closer to 800 in the last 6 months. So it's done almost a 60 to 100% move. So out here, some profit booking, and a lot of these names have done really well. So if you look at a Prestige Estates or a Brigade Developers or DLF, they've all done well. So some bit of profit booking, but the chart structure still remains positive. The trend is still positive. It's still a buy and dip sector. So DLF looks the best one out here after today's correction. 500, 520 is a good zone to accumulate the stock and would expect slowly and steadily a new 52-week high again on the stock.
Weakness on the charts of Zomato right now, while it's still holding on to that 100 rupee per share mark, it's down about 4.5%. Kunal, I don't know what was the recent high on Zomato, but you think the weakness is going to get severe from here?
Not really. I think 105 or 106 was the high the stock had made yesterday. And in the last 2 months, I think the month of August and September, the stock tried to test this 102 or 103 mark 3 times. So yesterday was a minor breakout. Today the stock has caved in again. But then the chart patterns are still stable for the stock. It's holding on to most of its short-term moving averages, 50 DMAs, etc. on the short-term time scale basis. Even the volumes today. So the stock is down today, 4.5%, but the volumes are less than the volumes which the stock had seen yesterday. So that tells you that maybe the long players are still not ready to sell off the stock price, at least looking at the volume structure as well. So that also probably puts in place that maybe 100 could be a pivot support for Zomato, and the stock may just meander into this 7-odd point range, 105 on the upside, 96, 97 on the downside.
Let's take some BTST trades as well on that note. Kunal, let's start with you only.
So I'll continue to be bullish on DMart, something which I initiated yesterday. Would look out for a higher target. 3880 was the previous target. So now 3965 as a fresh target for DMart. Traders could look at a fresh buy at current levels. Stop loss at 3820. And the second would be a buy on HCL Tech. My sense is that many of these IT stocks are actually getting into an oversold territory. Would expect a reasonable bounce on HCL Tech, 1266 as a target. Stop loss at 1215.
Right. Naresh, what about your BTST trades?
So 2 contra trades here, 2 stocks which have corrected. First is the buy on Axis Bank, 990, 995 has been a retest. So out here expecting a bounce back. Stop loss at 987, target price of 1020. Second is a buy on Maruti, getting back to that 10,000 mark. Could see a bounce back from here. Stop loss at 10,050, target price of 10,350.
Right. Okay. Just looking at some of the events which are lined up tomorrow. Of course, tomorrow you've got the Nifty expiry. There's Plaza Wires IPO, which also closes. The Cricket World Cup, of course, officially kickstarts. And tomorrow you've got the Bajaj Finance fundraise as well, which is slated, tomorrow. Kunal, just a quick chart check on Bajaj Finance. I mean, everything was fine up until the weakness that's trickled in today.
Yeah, but I would not call it as a major changing point or a trend point for Bajaj Finance. Today's weakness again is on the back of the stock opening up higher. I think it was almost at a touching point towards making a fresh high for itself. Has come back towards midpoint of the yesterday's trading range. So we call this as a minor retracement till the time the stock doesn't break the 3-day swing low. So I think 77.25, 77.20 is the support for Bajaj Finance. Until the time the stock trades above this level, this weakness or this dip actually should be bought into.
Okay, much in line with the weakness across the Asian screen, we as well have felt pretty hard and, to be honest, tried to stay as resilient as we could. So the Nifty's managed definitely to climb back above that 19,400 mark and quite conclusively so. I mean, if we were to close around these levels, even post-adjustment, I think we should manage to hold on to 19,400 a print. It's been a 700-point fall, by the way, that we've seen for Japan today. Korea fell down about 2.5%, and Hong Kong as well was lower by about nearly 150 odd points. So amidst that, we've not done or as bad, one has to say. Europe though has started off okay, marginally in the green to about flat, and that's exactly what the US futures as well are quoting. Marginal weakness to a little bit about flat moves coming in. There's also, MedPlus as well as Neogen Chemicals, which are looking to consider fundraising along with Bajaj Finance today. And like I told you about the IPO action, that's Plaza Wires, wherein the IPO closes for subscription. Devang, just wanted to get in the take amidst the new listings that we've had off late, including, of course, JSW just yesterday. I wanted to understand if there are any buy recommendations there.
No, I shall not as such buy recommendations, but I think the last couple of months there has been a slew of IPOs, and again the IPOs were such that most of them got oversubscribed by a reasonable margin. And I think in the last 4-5 months we have seen some decent listings as well. One good part is there has not been that large IPO, the poster boy, where you normally see the market tanking or correcting after that. So that's one silver lining I can find out, that still decent IPOs are getting subscribed, not so good IPOs are sort of not getting subscribed, and there is no as such a very large IPO which just pulls out the liquidity from the correcting market as such. So that's one positive I read out from this space.
Right, okay, that's the take coming in on what the primary action, market action has been off late. We've of course talked about, the many IPOs and the kind of subscription that we've had to them off late. A couple of other names which we're going to be looking out for, of course. A is the recovery that you've seen in HDFC Bank today. It's finally closing in with at the session top, almost a 1% move is what you've seen on the stock on the futures, and a near 2% move on HDFC Bank from the session lows. It's finally recovered all the way back to 1500 thereabouts. Kunal, worth a revisit actually. What you next foresee on the charts for HDFC Bank?
I think this is a very good recovery for HDFC Bank. So yesterday's candlestick pattern was more like a hammer pattern for the stock, and typically post that we wait out for a confirmation. Today's price action is actually more of a confirmation that the stock may have formed a major bottom for itself at the 1500 odd mark. So I think 1500, 1530 has also historically, I think 2022 as well as 21 has been a major support for HDFC Bank, from where the stock had seen a strong rally or pickup of price action. So I would probably expect the stock to show similar kind of a price action. So I think from a short to medium term kind of trading play, it's a very good level to buy. The risk reward is definitely favorable for HDFC Bank, for traders specifically with that kind of a time frame.
Okay, risk reward is quite favorable for HDFC Bank. Quite a bit of up move is what we have seen on that stock today. Up move also seen on DMart, which is higher by 4%. You also have Endurance Tech that Sharad is talking about, up around 0.7%. Nestle, MapMy India, all of these stocks have seen good amount of volumes today. In fact, sitting at all-time high levels today in a weak market like this is MapMy India as well as Safari, and some of the electronics manufacturing names like Keynes as well. Kunal, anything that you like from these names if you track Safari, MapMy India, Keynes?
So MapMy India is something which I do track very closely. The stock I think has done exceptionally well even in the last 2 weeks, from 1700 to 2200 levels for MapMy India. And I remember, I think prior to that, the stock for almost the entire month of September had gone to a consolidation, just meandering at the 1700 mark. So there was a process of a strong rally and then a consolidation for MapMy India, and the stock went into a mean reversion, trying to test its 50-day moving average. So that mean reversion is completed. I would not initiate a fresh buy at current levels, even though the chart patterns, the momentum is quite strong, because the risk reward would be a bit off at current levels. So would wait out for retracements or even minor corrections for adding on to positions over here.
Actually, let's pull up the intraday chart of Metro Brands as well. Is there a huge spike there? Because I think the stock was actually in the red for most of the parts, and now suddenly it's up. Let's quickly, okay, so there's something wrong with my rates that I'm seeing right now, because that was showing a bit of an up move. But that's how we're closing the trading session. Yes, it's a red